What's up, everyone? How you doing? I decided to go live this weekend, this morning, this wonderful morning. Just got done doing a master class with my students. We jam-packed a lot of information, helped 2 people today have a lot of fun. So I just decided to go live. I got a ton of energy and I need to put it out there. I got a lot of stuff I want to share with you guys. Today is a showdown. Got to share some good news with you. And then I also want to take time today to just give a lot of value. So whoever's in the house, comment if you have a question that I can help you with, something you've been struggling with, something that I can answer around velocity banking, infinite banking, kingdom authority. I'm going to take the next, 30 minutes or so to just put some value out there, add to your life, add to your financial life, get you in that position so that you can get this thing rolling. Maybe there's something that you've been stuck with, or something you can't find, or something you don't understand. Math I need to explain, a formula, whatever it is. Let's get it started. Let's see who's in the house, who's got any questions at all. Got 16 people, 17 people in the house already. Comment that you're here. Let me know. And I'm going to answer some questions. Just going to give some value today. What's up, Jason? How you doing? Hey, Jesus, how's everything going? Hope you're doing well. Finally, I'm officially moved in to the new office here. I got a crisp little seat right here. Got some good lighting. I finally put the board up in the back. You don't see it, but I'll be doing some videos on that soon. I got a little rhythm here. Oh shoot. A little camera flick. You know what I'm saying? It's exciting. It's exciting. You want to hear some good results? Because no one's putting up any questions just yet. Like I said, if you got a question, let me know. I'll help you today. I'll help you right now. So let me go ahead and share some really cool things with you guys. All right, as you know, and if you don't know, and you're new and this is the first video you're watching on this channel, we cover velocity banking, infinite banking, kingdom authority to help moms and everyone around the US and abroad achieve financial freedom, become debt-free, increase cash flow, and secure, build wealthy kingdoms for our children so that they may cherish this earth, respect it, grow it, and impact others' lives to be effective in the world, okay? You must always know your 4 major numbers when you're working with me: income, expenses, debt, cash flow. When you know these numbers by heart, down to the T, your life becomes very simple when you're doing velocity banking. So, this information is just for my fans, people that have been watching me for a while. Look what I went ahead and did. I became the finance geek. Trademark, patent, come at me. I think you can get a good look at this. Let's see. Yeah. Nice, clear, lovely trademark. Been working on this since March 2019, and it's finally official. So super excited about that. I'll have to show my mom. I forgot to show her, man. I gotta show mom. Mom, if you're watching, there it is. But I'll show you when I get home. The next thing, if you haven't noticed, your boy, Mr. Finance Geek, hit 10K subs. If you haven't noticed, you noticed. It's there. And on top of that, we also broke 1 million views. Oh my. 1 million people in the US and abroad have been exposed to the kingdom. And who's in charge? Infinite banking concept and the velocity banking concept. 1 million people. It's probably not 1 million people. It's probably like maybe 750,000 people or 500,000 people. And then those same people watch my videos like 300 times. So who knows? Who knows? Who knows? What else? What else? What else is new? got the trademark, hit 10K subs, million views, and then now, so I've been working on this for a while, been really building this out, the Velocity Banking Manifesto, and I'm super excited about what I'm doing in 2020. I found this platform called Kajabi. It is like the cleanest platform I've ever seen in my life so far. Super affordable too. In fact, by me switching over to Kajabi, I'm saving money and I'm getting more for my dollar. Talk about velocity banking on your business. So Kajabi is going to be this new platform that I'm going to be moving all my content over to. So for those that are in the manifesto program already, those of you who are personal one-on-one clients of mine, or you're in the masterclass, get ready for 2020. We're about to amp things up, my friend. Okay, I'm actually going to be launching the community group in there, so you'll be able to, talk and collaborate and ask questions of successful other velocity banking students that have been getting results, and maybe there's a credit union in their state that you're looking to get approved for that they got easily approved for and that can help you, or any question you got. It's gonna be like a community group in there, and that's gonna be like a lot of freaking fun. That's where I'm gonna spend a lot of my time. In addition to that, I'm gonna be reading all those questions and basically just making videos based on your questions, around velocity banking and infinite banking, and then just different ideas, creating wealth. Another thing I wanted to do is like find other experts outside of velocity banking, like people that do trading, forex, options, people that talk about real estate, and then just do a Q&A inside the manifesto, schedule it live so you guys all know. You'll get the email, and you come to a class and you just learn more stuff about money, right? I even want to start talking to like pastors and start talking about money and God, money and the Bible, man, how we can get that thing together, because you got a lot of broke Christians out there that are tripping, that are not getting access to the abundance of their King. And there's concepts that we must learn in this world so that we may access many other, blessings that come from above, if you know what I mean. All right, that's it for my announcements. So let's turn to the chat room and answer some questions. Yes, you've been blowing it up. That's what I like. All right, let's drop some value. Hello, Mindy, Albert. Hello, Pelican. Albert. Okay, Mindy. Should you use line of credit to pay back an infinite banking loan? Of course. Depends on what we're talking about. So, if you initially started your policy leveraging debt, then of course, right? So you went from, let me illustrate it. So if you're saying you have a line of credit and we have an IBC policy, number one, you either used capital, initial capital, to start the policy, or you leveraged debt to start the policy. One of the two, right? And then what you did is you take out a policy loan, and then you either pay off debt to increase cash flow, save money on interest, build credit, or maybe you made an investment in something, right? One of the two. And now you have an existing policy loan on your IBC policy, and let's say your line of credit is at 0. Depending on what time of the month you are in, let's say you're at the beginning of the year, right? You're between the first 6 months of the year, you've already, let's say you've max funded the policy already, and you have a loan outstanding. So that means no more new money is going into the policy. You've max funded it. And you got this line of credit here. And you have a loan outstanding. You paid off debt. The move was done. Yeah, you can then either use this line of credit to do a double chunk, right? Do a double chunk, or use the line of credit to restore the policy loan to zero, to then take the money right back out again and either pay off debt or make an investment. And then all your income goes in, expenses come out, cash flow stays in, you offset your borrowing cost. Does that make sense, Mindy? So yes, you can use a line of credit to pay back an infinite banking loan. I mean, I'll do that on my own policy for sure. But understand that you could have a policy loan outstanding for as long as you want, right? It doesn't matter. You're earning more than what you're being charged on that policy loan, if your policy is designed properly for the infinite banking concept. So that's where I presented this idea of double chunking, where if I'm in the beginning of the year, first 6 months, I've max funded the policy, I took money out, did a chunk to pay off debt, and I have a line of credit at zero, I can do a double chunk, 66% of the utilization on this line of credit, and chunk at more debt to increase more cash flow, build credit even further, do velocity banking on this. By the time I reach the anniversary date on the policy, if I have no more capital, I could leverage the line of credit to max fund the policy. And then do what? Take out another policy loan. That means I did not pay back the first one that I took out. So that means I'm max funding the policy to take more money out, to leverage more money against it, and still earn all the money as if I never touched it. You know what I'm saying? So that is very effective, very powerful. Hope that helps, Mindy. Let's see. Albert says, Denzel, I have 2 credit cards, 0% till 2021. Paid off 2 trucks with it. I have a HELOC at 0. Do I pay down the credit card or use HELOC to pay down the mortgage? Okay. Let's take a look at this. Right? Let's take a look at this. Let's see what we got here. I got 2 credit cards on 0% till 2021. That's pretty cool. So I got 13 months, right? Till they both expire. So we got 2 credit cards, 0%, expires 2021. I have a HELOC at a 0 balance. I owe nothing. I have a mortgage I want to kill. There's balances existing on here already, which he probably used for expenses or whatever the case was. HELOC's at 0. I got income, expense, debt, cash flow, right? On my 4 majors. I got a 13-month window before I have to pay this back. So I would do a chunk towards here, the mortgage, right? I'd use the HELOC to pay down the mortgage to save a bunch of money on interest, right? Cut off a bunch of years off that mortgage. Do velocity banking for the next 13 months. The goal is to bring it back to 0 or close to it, to then be able to chunk at these 2 credit cards. The difference between that amount that I throw over here, and then the rest throw it at the mortgage. So the second chunk, 13 months from the first chunk, I don't know if I would wait that long. Doing velocity banking, you want to typically make chunks that you can zero out within 6 to 9 months, right? So there's a potential that we could make two chunks, two solid chunks towards the mortgage, and then a small micro chunk, even if there's a balance on the HELOC, doesn't matter. A small micro chunk, small micro chunk back to the credit cards. And by that point, what could he do, everyone? Go get 2 more credit cards at 0% till 2022. You know what I'm saying? And just keep it flowing. Keep it flowing. You know, a great idea that just, comes to mind is, I could double chunk using credit cards and a line of credit towards my mortgage. Can I not? Isn't that a possibility? Like if we did the math, right? Because you got to do the math. Let's say you have a line of credit and you have a mortgage that you want to pay off. The goal is to become debt-free from the mortgage. Let's say that's the case. You have cash flow, you got, good credit, not Grant Cardone, good credit. You got good cash flow, and you got this line of credit or a HELOC, and you know your chunk amount, so we're going to make a chunk towards your mortgage. To help bring this to zero that much faster, we could get credit card or credit cards to basically shift expenses onto the credit card. So instead of velocity banking where all income goes in, expenses come out, you could essentially shift a bunch of expenses like, $10K, upwards of $20,000 even. Let's say your chunk initially is going to be $15K, right? From here, the line of credit. The amount of time that it would take you to zero out this $15K, let's say it's 8 months. Well, if I shifted expenses, then my cash flow temporarily goes up, does it not? Plus, if this thing comes with cashback rewards, then I'm making money on it. I'm making money on expenses, and that would permit me to do about maybe a double chunk towards a mortgage to save even that much more on the property. And then by the time this thing expires, right? Let's say it expires in 2021, like Albert's, 12 months from now, 13 months from now, whatever it is, you could just open up another credit card to run your new expenses for that new year and then use the line of credit to pay back that original credit card. And you'll still have the funds to then do another double chunk. So every year, you're basically shifting maybe $10,000 to $15,000 of expenses. Basically, you want to shift the same amount of expenses as one chunk that you would normally make in a 6 to 9 month period. You can shift it to the credit card. And that gives you permission to almost do a double chunk in a shorter period of time. So if it took you 8 months to zero out 15, but with increased cash flow, you can get it done in 4. Well, now that permits you 2 chunks in that same time period, which permits even more interest savings on that mortgage, getting you closer to paying it off, big guy. So yeah, that sounds like a cool idea, Albert. I'd play with that. I would play with that, right? Because credit cards is like a really cool, can be very effective. When you have terrible credit, oh my God, credit cards is like the one thing I want to get rid of when I'm working with clients. But credit cards end up being a fantastic tool to add to your velocity banking strategy here. So let's see, next question. So, should you use your line of credit when you reach 60% of your credit limit? Use it as in use more of that credit limit. I try to avoid breaching 66% of my credit line as much as I possibly can. But if we're doing velocity banking, we've already reached 66. Chances are you've made your chunk. Now you're just doing velocity banking where you're bringing that line of credit back down to zero. Here is a question from Joe to make you think. What happens if we hit a recession and homes lose values and banks start closing HELOCs or loans? Would this hinder velocity banking for us? Possibly. Let's see. Let's make sense of this now. Now, if anyone pays attention to the marketplace, or if you don't know anything about the market, you ought to learn. It'll be important. Pay attention. Know what's going on in your economy. There's a guy named Ray Dalio. He is like the guy in terms of predicting, foreseeing recessions and depressions and market crashes and things like that. He's the guy you want to look at. Ray Dalio says in 2 years or less from today, or from 2019, about 2 years or so, where we are definitely headed for a possible recession, right? Or a downturn. He talks about corporate debt is like, I don't even know if I'm spelling corporate right. Did I spell corporate right? Corporate debt is at a huge number right now. Huge. Bad. No good. Consumer debt compared to debt payments is not as bad, but corporate debt is really bad. So he says we're approaching a recession. Now, from 2007, 2008 till now, we really haven't had any bad stuff go down just yet. So it's only a matter of time for that to happen. Let's say I'm doing velocity banking and you know what hits the fan? The market crashes. So let's say you got a HELOC on your property for $80K. Depending on your income, expense, debt, cash flow will determine what is my chunk number, right? So 80,000 times 66% is 52,800. To solidify that number, let's say you're someone that makes $7,000 a month. You spend 5, you're left with 2. 2,000 times 12 months is 24,000. So by no means would I ever recommend that person to chunk $52,800 towards debt. That's double over leveraged my cash flow. I wouldn't go that high. I would find somewhere in the middle, right? So let's say you did that. Let's say we found a middle number, call it, maybe you did a 35K chunk, right? You did a 35K chunk and then just shit hits the fan, right? The market just goes down. But see, before you even realize that the market goes crazy, most people don't even know what happened till after it happened, right? Like months after. Like, what? We're in a recession? Oh, shoot. Oh, this is going up. That's going, this is going down. And then you hear the news and people panic and people start selling their assets and whatnot. And then you see the losses. But over here, I think the banks are smarter now and there's more regulations. I highly doubt that the banks are going to repeat exactly what they did in '08. I really don't think that's going to happen because they're too big to fail now. That saying that, you watch the movies, right? They're too big to fail now. I don't know how true that is. I watch this guy a lot to try to learn about that, to get my mind to think, okay, what would go down? What could happen is you chunk 35. If the home loses, if I chunked 35 towards the mortgage, let's say, that's 35,000 less in principal and interest that I owe on the property. That's 35,000 more equity in the property. If anything, they lower my HELOC from 80 to what, maybe 60? But why would they do that to me if I'm only using less than 66%? So I'm being a good borrower, right? Why would the bank hinder me for that, for being a good borrower? I don't see them freezing it. I think the only reason why they would freeze it is if a clown uses all 80,000 or all 52, they're over leveraged. And then they shrink it down to 52.8, exactly what you borrowed, right? Now, I think what could happen is to people that don't have HELOCs, that don't have a line of credit in place, and now they try to get one during a recession, I think the banks are going to squeeze a little, and they're going to restrain who they borrow to. So they're not just going to give to any Joe Schmo anymore. I think they're going to restrain who they would lend and how much they would lend to. So it would be smart, and I've heard a lot of financial people talking about this, is now is the time to start paying down debts, right? Now's the time to prepare to have access to capital and cash, because those people who are liquid right now are going to be able to buy a lot of stuff when everything goes on sale, when there is a downturn in the market. So that's how my mind is thinking right now. So, now's the time to be debt-free, people. Now's the time to start 10xing your income. We're in such a fluff economy right now, very fluff. People buying things they can't afford because wages are up. People are working. A lot of people are working. Unemployment is very low right now. So people look good on paper. People look good on paper right now, but a lot of people are over leveraged on their debts. And once that, restricts, the people with cash and capital, aka freaking rich people, are going to buy everything up again while everything goes on sale because, they get a little scared and they sell their assets and whatnot. Everything goes on sale and yada, yada. So that does make me think a little bit. I think in terms of velocity banking for people on a small scale, small income, small cash flow, yeah, I don't think you're going to get access to credit lines and HELOCs. They're already hard to get right now. It's not the easiest thing in the world to acquire right now. HELOCs, line of credit, to do a HELOC, they got to do the appraisal, they got to check your score, they got to ask questions, all that. Line of credit, same thing. They take you through the works before you actually get approved for something. So I can see velocity banking being ineffective for people that have low income, low cash flow, low credit score. Like, it's just, you're kind of like at a standstill, where that goes into my content about what? Managing your money, being a good steward, not spending more than what you spend, become a minimalist, be frugal, go into conservation mode, don't buy anything, stop buying consumer debts, start acquiring assets, start 10xing your income so that you are positioned when the storm comes. When the rain comes, your foundation, your house is not going to be moved because you built it over a rock, right? There's a rock. You built it on solid ground, as opposed to everyone else that built their house on sand, right? Those people are going to wash away. And then the people that have been doing velocity banking in advance, people that have been doing infinite banking in advance, the people who have their authority in advance, hey, you're going to be fine. When a recession happens, things go on sale. It's actually good for the people who do have capital and cash. Things go on sale. Next question. Jason, I can say you have been a big help. Over $147,000 paid off on mortgage and cars, completely paid off in 13 months. And over 70,000 in lines, in credit lines, 118,000 in credit cards, as well as business credit 30K. This guy has capital, right? So I highly doubt a guy like him, when a market goes down, I highly, highly doubt that the banks are gonna like take his capital away. In fact, he's gonna have this ability to borrow to buy things that are gonna come on sale. Oh yeah, let me buy that, let me buy that, let me buy that. And then the market comes back and this man is cash flowing everything that he borrowed, right? He don't even need to pay it off because he's cash flowing, right? So that would be a really, really cool move. So a guy like him is preparing, right? He's got his home built on foundation, right? He's got a good foundation. It's under rock, right? He's got good roots, right? Good mentality, good thinking. And when everybody else is panicking, his house is, hey, there's a storm. Hey, fear not, right? Just like that story in the Bible when Jesus was sleeping during a storm. Talk about being secure, not only in your faith, but physically, emotionally, spiritually. Wow. Wow. Next question. Snapbean says, nice, keep up the good work. Larry says, just started watching. You have a great channel. Thank you, sir. Appreciate that. Ronald says, good morning to everyone. Jesus says, when is a personal line of credit ever a better debt weapon option than a HELOC? Good question. Let's see. When is a line of credit better than a HELOC? I would say for those who don't have homes, your only option is a HELOC. For those that do have homes but no equity in it, your option is a HELOC. So that's a situation when it's better. But typically, HELOCs are always better than PLOCs from an interest standpoint and a security standpoint. I mean, the HELOC is secured, the PLOC is not. It's secured against your equity. The HELOC typically is going to be less interest over the PLOC almost all the time. So the only time that PLOCs are better than HELOC is on that person's situation. Like they don't have a home or they don't have equity, we go for the personal line of credit. Okay. Let's see. John says, how is velocity banking better than extra payments? So you must be new, right? For a question like that. Oh yeah. So here's what we're doing with velocity banking versus extra payments, debt snowball, debt avalanche, right? It's simply this. I'm taking the bank's money, John, in the form of banking products, HELOC, line of credit, credit card. And essentially I'm borrowing at 0%, right? Borrowing at 0% via daily at a daily average rate. Okay? So I'm borrowing at 0% at a daily average rate. over here, on the extra payment side of things, you need time to acquire your extra payment. Would you agree? So over a 30-day period, from a month-to-month basis, you make your income, you spend your money, what's left over is your cash flow. So it takes you time to accrue the cash flow so that you can make the extra payment towards more than likely an amortized debt. Okay? An amortized debt is an interest rate that is going to be front-loaded, charged up front in the beginning years more than what a line of credit or a HELOC would at this daily average rate. Typically, at a daily average rate on whatever I have outstanding, whatever I borrowed, you take that amount, John, you times it by the interest rate, whether it's 2%, 5%, 8%, 15%, whatever it is, right? You take the balance of what you borrowed times the interest rate, and then you divide it by 365, and you get your daily cost. And it's usually a couple of dollars a day. Versus over here, the money that I borrowed, I make lump sum, big payments, aka chunk, right? A chunk. In advance, John, in advance. Meaning I don't need time to acquire my cash flow because the bank already gave it to me from the line of credit or the HELOC. So if I paid a chunk in advance in a lump sum, wouldn't I pay more towards principal than your measly extra payment? Wouldn't that be true? Yes. Okay. But now you're still in debt, right, over here. But at a daily average rate, couple dollars a day. The amount of interest that we save, John, over here is cushioned against whatever I'm going to pay over here, right? So let's say your extra payment is $1,000 a month. That's $12,000 a year. That's all you can do, John, at the end of every month. That's all you can do. That's your cash flow. But with Velocity Banking, I could take the bank's $12K plus my $12K and make it $24 at the least. And now I got $24,000 in there. The first 12 cost me nothing because I saved many thousands over your extra payment. Okay? That is my answer. Let's see. How's my audio, guys? Am I sounding good? I think I just saw a comment that said that the audio was what needs to be improved. Is it just them? Is it just them? Or is it me? Let me know. Let's see. Dividend Portfolio says hi. Mrs. Dawson, hello. Has a $50K line of credit. Bank made us pay off $26K debt to get it. Husband has, oh, that's some personal information. Husband has some gambling problems. Taking out money from line of credit, not putting full paycheck in line of credit. I can pay off line of credit with retirement loan. Advice, please. We gotta have dang. What am I, a life coach now? Let's see. Let me think about this. What do you think, guys? Husband's got a gambling problem. Okay, if I throw my retirement in there, what's he gonna do? Take that again? And now I'm out of retirement and in more debt. Then what? Would that make sense to do that? I don't know. Let me see something here, because I know I've been working with Ms. Dawson for some time now. So I know you did what I told you to do when we first spoke. Now, stuff like, this is when this comes into play, guys. This is when this comes into play. This kingdom authority. You guys think it's a joke sometimes, that it's just about the money and how I manage things. No. How you do one thing is how you do everything. The way you show up in life, your way of being around your spouse, your partner, your friends, your family, it's all the same. It's all the same. So if you are someone that is dealing with a spouse that's got money problems, like they're just not getting the concept of velocity banking, infinite banking. They don't even get the concept of freaking debt snowball because they can't manage their money right. Right? This is where this comes into play, people. This is when prayer becomes real, right? For people that ain't so prairie, right? This is when church comes into play. This is when my friend Jesus comes into play for all that, right? So that's my only answer is, you got problems, man. And it's the man with the problems, and you're supposed to be the head of household. That's your role, man. I don't know. I'm only 23. I don't know nothing. So all I'm saying is you got to get the household on the same page here. Like, what are we willing to give up to be what we could be? What are we willing to sacrifice and let go of? Egos, pride, sin, so that we can become something that we're meant to be, fulfill our purpose. You can't have both. You can't serve two masters, for you'll love one, you'll hate the other. Okay, that stuff is real, right? So, well, it's easier said than done, right? Jason says, hey, tell hubby, stop gambling. What are you doing, right? You can go all New York on him all you want. But there comes a time when one realizes they've hit rock bottom. And when that time comes, there's an awakening, right? And I'm simply saying, speed it up. Put Jesus in your life, right? Go to church, right? Get the word, man. The word, right? Read it, absorb it, and feed it into your man. Feed it, right? Because you're supposed to rescue him when that stuff happens. That's what you're supposed to do. You're supposed to rescue him. That's your role. Right? So let's take a look at that. Let's see. Next question. Do I use HELOC to pay down credit cards so I can use again? So I think I answered you already, Albert. How do you pay mortgage with a credit card? Plastic doesn't work for my Visa credit card. You don't use a credit card to pay your mortgage. That is foolish, because that's a lot in cash advance fees and whatnot. We don't want to do that. The only way I would do that, the only reason why I would authorize myself or say to a client, hey, that might be a good idea to use a credit card to pay off a mortgage, is if there is a zero cost of borrowing. So I can do a balance transfer at 0%. It doesn't cost me anything. Or maybe it's a small balance transfer fee, 2%, 1%, 3%, whatever it is. And based on that cost of borrowing versus what I save in many thousands, that would make sense to do that. But I'm not just going to simply use a credit card to pay my mortgage. What's going on, man? We're trying to use credit card to pay mortgages. That means we don't have our what, guys? We having problems over here. We having problems over here, right? We got some cash flow issues. Trying to use credit card to pay off the mortgage, right? It sounds like a great idea. I know people on YouTube talk about it. It's because they're adding other tools to it, right? They're talking about balance transfers, talking about 0% offers and whatnot. So that's when it makes sense. But other than that, no, man, we need a line of credit. We need a HELOC or a high cash value life insurance policy, one of the two. Next question. Okay. Jesus is giving advice to John. You leverage the line of credit to pay your installment loans faster. You can reuse the money from the line of credit, unlike throwing extra payments where you can't. Very true. John says, example, I owe $7,000. Okay, guys, we all owe $7K right now. And I have $1K cash flow. Oh, wow. Did I predict his cash flow earlier or what? With $300 payments, it will take me roughly 6 to 7 months to pay off with extra payments. But with line of credit, it will take the same amount of time to pay myself back, ? I understand the concept of velocity banking and love it. It's just I get asked that question the most, and when I do the numbers, it's only a couple months faster. Okay, when you're dealing with smaller debts, right? I mean, dude, 7K, how much faster do you want to go, right? This is, guys, velocity banking, let's just be clear. Velocity banking is not a magic pill. It is simple math. If you get the math, you'll get the results, okay? So velocity banking is not a magic pill. If I had a line of credit for 10K and I take a 7K chunk and now I'm done with it, I now have $1,300 in cash flow before the other guy that does 1K in addition to his 300 extra payment each month, right? That makes sense? So there's two options. That 10K I take, say I got a 10K line of credit, and I take 7 out, okay, now it's done. And now I immediately cash flow that the following month. If you make $5,000 a month, and now you got $1,300 in cash flow, how long will it take me to zero out the line of credit? Well, let's do the math. 7K, right? 7,000. Income goes in, balance goes down to $2,000, expenses come out. What are my expenses? 7,000 minus 1,300. What the freak? 7,000, no, 5,000 minus 1,300. So 7K is the debt, 5K goes in, 37 comes out. I'm done with the debt, right? What you want to do is look at the math and see how much interest do we save by paying off that 7,000 early via the line of credit, depending on what the interest rate is on here. So 7,000 minus 5K, balance goes down to 2K, plus 37, 57. That's 1 month. Do it again. Minus 5K plus 37. That's 2 months. Hey, look, John, 44 minus 5K. I'm done. 2 months, right? Technically, I paid off the line of credit, guys, over the course of 2 to 3 months. At this point, all I'm doing at that point is just running bills through the credit card. Through the line of credit. And if I want to speed this up even faster, I could add a credit card to the equation and run bills that can be paid with a credit card, right? Run bills that can be paid with a credit card that buys me 30 days each time, that saves me 30 days of having to pay interest on the line of credit on however much money I shift from the 37. Let's say you're able to shift 1,000 in bills per month. So technically, over a period of 30 days, 5K went in, 27 came out, and then the very last couple days of those 30 days, 1,000 came out again. But by the time that 1,000 comes out, what else is happening? I'm getting my next 5K coming in that following month. So technically, John, 2 to 3 months it takes to pay off the line of credit. And then every month thereafter, I'm not paying nothing in interest. So that's the point. And then when you add to the equation, okay, we had a 7K debt, and then maybe we had another 14K debt somewhere that's costing me $250 a month. And so here's where velocity banking does that debt snowball, where the snowball effect gets bigger and bigger and bigger. Here's where I start to blow past extra payments. Is now I have the ability in month 4 or 5 to make my next chunk towards something. And if I only had the 7K and I'm done within 3 months of paying off the line of credit, but now I'm just running bills through it, it's not costing me anything, I could structure my next chunk towards something, maybe an investment, maybe a life insurance policy, IBC, I don't know, start a business. So we have this ability to do other things with the money faster than extra payments. And then the other addition to that, like Jesus said, was I have this 1,300. I never lost my money. I never lost my 1,000. It's here in the line of credit. I can use it again, right? So I get to use money more than once, right? So when you're doing your numbers, you want, and if you're working with someone, you want to be able to identify that month where technically the line of credit hits 0, but you're still using it to pay bills. But it hit 0, but you're using it to pay bills. But it hit 0, right? And you're like, I don't know. You got to think about it. It makes sense when the stuff really, like, you see it happen, you're like, I hit 0, but I still got to pull, but I'm only pulling to pay bills. So that means I still have my cash flow. And the line of credit, and the debt that I wanted to pay is done. And I got the 300 to me flowing for those next 4 months, right? I got done in 3. Next 4, as opposed to extra payments, that cash flow is back to me. It's not going to the institution. It's coming to me. It's my line of credit that the bank gave me to use and leverage. Next question. Let's see. Carl says, we need velocity banking in the UK. Yeah, man. They struggling over there, I guess. Let's see. Jasper. John, Denzel have a few videos explaining how velocity banking is better than extra payments. Oh, okay. Craig, we are so thankful for the content you share. We have been blessed by your knowledge. I wish everyone I told about velocity banking would listen to you and learn. Most people just shrug off what I tried to tell them. You're absolutely correct, Craig. And then when you know what hits the fan 2 years from now, like Ray Dalio says, when the market turns down, they're all going to come back here. I need to borrow money. I need to borrow money. Right? And then what? The banks are going to squeeze and restrain. and then you're left with debt snowball. And that's all you got to do, right? When you could have been leveraging in advance, and then by the time the recession does hit, you are recession proof. You don't have to worry about your capital getting squeezed, right? Because even if it did get squeezed, you have so much to work with. What is something that I always say on my channel too, as you're doing velocity banking, as you're paying off debt, you should be acquiring more and more credit lines, whether that be through credit cards, another line of credit, or just simply increasing that credit line limit. Simply increase it, right? You're basically increasing your savings that way, right? And you just keep going. And then when the market crashes, things happen, the storms come, the rain comes like it always does, it washes the weak, right? And it makes the other people stronger, right? The people that took this knowledge ahead of time, right? That started positioning themselves ahead of time before the storm came. Let's see. Jesus says, can you write that interest formula again? I missed it. Yeah, so formula for simple interest. Let's say you took 10K as a chunk. Let's say your interest rate is 7%. 10 times 7 equals number. And then you take that number. That number represents the whole year. If you were to owe $10,000 for a whole entire year, here's how much you would pay in interest. On a daily rate, you divide it by 365 and you get another number. This is what you actually pay in interest per day. That 10K went towards an amortized debt, more than likely, and let's say it saved you 10K in interest. So not only did you pay 10K in principal, but then you also saved 10K in interest, let's just say, like a mortgage, right? All right, well, awesome. This is my cushion for whatever I pay over here. And I'm not going to owe it for a year. I'm only going to owe it for about maybe 6 to 9 months. In those 6 to 9 months, remember how I said you hit zero before you actually hit zero? So by month 4, 5, 6, 7, 8, right? Those months are just months that you're putting income in, taking expenses out, putting income in, taking expenses out, right? And the cash flow is what's really knocking it back down. Well, at that point, you're paying less and less and less and less interest every month there forward. Because the first month you owe 10K, the second month 8, the third month 6, the fourth month 4. So 7% on 8K is less than 10. 7% on 6K is less than 8. 7% on 4K is less than 6. It just keeps going, my friend. Let's see. Gotta have a come to Jesus meeting, LOL. Snapbean says. Yeah, man. Got a whole lot of unbelievers. That's all right. When the storm comes, oh yeah, they're gonna be praying on their knees. When the storm comes, boy, wow. I don't even want to erase Jesus, right? I'm gonna keep him there the whole time. Right? When the storm comes, people, that's when you see people's true colors. That's when you see how sturdy your philosophy was on extra payments and right? Whatever it is. Let's see. Dan says, I understand the velocity banking concept. If I use part of credit to pay debt, bank charges advance fee for each advance. Appears no benefit to use this approach. Correct or not? How do you understand the velocity banking concept, but then you tell me if I use part of credit to pay debt, and now you're getting charged advance fees, guess what? You're using velocity banking improperly. I just got done saying that I borrow at 0% or close to nothing. You're over here telling me that you're borrowing and paying the same amount in fees in what you just saved on the other side of the debt. So guess what you're doing? You're borrowing from Peter to pay Paul, and you stopped there, right? So now you owe Paul and you still owe Peter. And now we look like clowns. We look like velocity banking doesn't make sense. So I think you need to watch more videos. I think you need to get engaged more and understand what exactly I'm doing. I'm borrowing at nada, right? Whatever I borrow, I'm borrowing a specific amount of money from that leverage debt tool so I can save way more money over here on Paul. I'm saving all this money on Paul so that while I'm paying Peter's not charging me nothing in interest. And I keep all my cash flow in the process. Does that make sense? And I cut the time down. That's also key. The time gets cut down, right? Let's see. Edna needs counseling ASAP to turn around before moving forward. I hear you. Guess what? Watch my videos. Watch my videos. Watch my videos. That's my only advice. Watch them. And then when you are ready, you can take action in terms of acquiring an accountability partner, such as the finance geek, Denzel Rodriguez, where you can join either the Velocity Banking Manifesto program, which is going to take all my content, put it in order for you, where you lay things out, and then you get past that, and then you join my masterclass. Or maybe you skip all that and you're like, you know what? No, I need you one-on-one, dude. I need you one-on-one. You can sign up for one-on-one coaching below in the comments, in the description, I mean. You can sign up. And that's how you take action before moving forward. Okay? Let's see. Ooh, Ms. Dawson says, just want him off the line of credit. That's it, I'm done. I'm done. Didn't know about his gambling problem until now, when line of credit came into play. He paid his share of the bills, so no red flags. So now I'm just trying to do this on my own. Sometimes we have to do things on our own, people. Sometimes we got to walk with Jesus alone because the way is narrow, right? And few make it. So sometimes we got to do things alone. And then everyone else follows once you really blow up, right? Sometimes you have to be the leader in your household. Doesn't matter how old you are. Sometimes you got to be the leader. You got to lead them. You're the shepherd and they're the sheep. Sometimes that's what it looks like. Let's see. Edna, I have a small 401k loan from previous job that I'm thinking of using it to fund a policy so I can borrow from it to do velocity banking to pay off debt. What's your thoughts, sir? It may or may not work. This is what I need first. I need to see this. Before I start infinite banking on any person, I usually like to see $1,500 or more in monthly conservative cash flow or initial capital. And when I mean capital, I'm talking real capital, not borrowed capital, like borrowing from a 401k. I'm talking you have either initial capital to start with, or you have consistent cash flow conservative $1,500 or more. If you do not have that, then it could look a little funny if I'm borrowing from here to then start a new asset where it has new cost, and then you borrow to pay off debt. And what I like to do is, and this may not be the case for everyone, but for most people that do not have capital or cash flow over $1,500, Where do we start, people? Velocity banking. And if I can't start there, where do I start? Debt snowball. Build credit to get access to the velocity banking, to the line of credit or the debt tool. I can borrow from here and do maybe a double chunk towards debt to increase cash flow, to then get to a point where I can then transition to IBC when it makes most sense, and then go faster in terms of creating wealth and paying off debt. Okay? Raymond, line of credit to pay off mortgage, question mark. Do you need 20% in equity to get HELOC? It depends on the bank. Okay? It depends on the bank. Some banks do 90-10. Did I say it right? Some banks do 90%, where it's like you only need 10% equity for them to offer you something. And then other banks, they want to see at least 20% or something like that. I forget. Or what? It's 90 to loan value or 80 to loan value. I forget. Different banks have different rules, so you want to pay attention to the rules of the banks when you're looking for that debt tool. Denzel, the real MVP, been working with him since 2019. Huge advances to my personal finances. Wonderful, love it. Another question. That's a come to Jesus moment if I ever heard one. Good for you. Where can I get his worksheet to run my numbers? The spreadsheet is just a spreadsheet. It's like writing on a piece of paper. There's all kinds of spreadsheets on the internet that you can download. In my Velocity Banking Manifesto program below in the description, if you go ahead and look at that, there's a spreadsheet that I use for all of my clients so that I understand where you're at. So the spreadsheet is really for me more than it is for you, so I can see your numbers. If you go to financialsudoku.com, he has a velocity banking calculator if you're talking about running your numbers through a spreadsheet that is like designed for velocity banking. He has a very affordable spreadsheet. That's the most affordable one that I've seen in the marketplace. Others charge $300 a month or like $4,000 for some software, where you and I are doing it on a freaking whiteboard and making sense of it, right? So that's where I come to the table. I'm like, look. I'm not a tech dude, by no means, but I do know math. And if all of us at least graduated from middle school knows math, we know how to add, subtract, multiply, and divide. That is all you need to know when it comes to velocity banking. Add, subtract, multiply, and divide. Is it going to take extra work doing it through paper? Yeah, big deal. You know, you're not losing time, right? By studying this, right? So that's my opinion on that. See, next question. Whoa, boy, I was going fast. No more questions. No more questions. I'm going too fast for you guys. Going too fast, man. Going too fast. All right, you want to hear something cool? Ready? Let's delete that. Delete that. Delete that. So this is something that I have been talking about in my master class a little bit ahead of time. I'm learning it myself, but we are, I'm getting better at it. So some real cool data. 3 things that I think you will find value. For those who are doing well financially. For those who are close to debt-free, for those who have high cash flow, who have a line of credit, who understand velocity banking, infinite banking, kingdom authority, you have a general nice concept of the idea. 3 things that I've come across that have piqued my interest. The first one is called cash value collateral loans. CVCL, cash value collateral loans. This is regarding IBC, where an individual, let's put me on the board. So I have a policy with Guardian, 60K plus in cash value. I can approach my marker dying. I can approach a bank. Now, how many banks are? I don't know. I only know of one so far, and I forgot the name. I did it in my class. I forgot the name, but it's somewhere in Pennsylvania, I believe. I can approach a bank with my IBC policy, and because I'm a business owner, I can get a business line of credit secured by my cash value. Let's say I got a 40K line. I got 60K, and they say, hey, give me 40. So I can get up to what I have in cash value in my policy. But let's say I just do 40. And because it's secured, the interest rate is going to be much lower. So let's say it's 4%. Let's say that's the rate. Okay. I've got this 60K growing at 5.85%. The bank is going to charge me 4% on whatever I use on this 40K. Because I'm a business owner, whatever I run through here, I can write off that 4% and still have all my money grow as if I never touched it, right? It's called a collateral assignment to the bank. They're not taking my cash value. I'm not taking out a policy. I'm not even taking the money out. It's just collateralized by the bank. I can't use that 40K for me. No, I only have 20K that I can use for me. But the 40 is technically here, and I can use it to run my business, write off the interest, and keep my money growing tax-free. How freaking cool is that? So you might want to look into that. Cash value collateral loans. And my mentor, Steve Parisi from the IBC Global channel. Look him up. He has content on this already. More detailed than I did, but I like it. The next thing, and I'm gonna grab another marker here because it looks like it's starting to fade. It's starting to fade. I don't like it. So we're gonna grab a different marker here. The next thing that has piqued my interest, that I like, and I think you all will like it too, are HSA. Anybody know about this? HSA stands for Health Savings Account. And I still don't know all the details, but I opened up an account with Lively. I threw $3,500 in there. That's the max contribution I can make for a single individual. If you're married, I believe it's $7K. Going into 2020, it'll be $3,550 and then $7,100, I believe. So let's see, let me make sure I explain this right. It's pre-taxed dollars going in. I can get a deduction from my business So I can deduct the 35 off my taxes for that year, the 35, and then it's pre-tax dollars going in 35. I can invest the money tax deferred, I believe, yep. Tax deferred, growth, and then I can use the money tax-free for medical. I hope I explained this stuff right. I'm pretty sure I got it right. So all the videos call it like a triple whammy. It's like a triple tax advantage. You got tax deduction with the 35, pre-tax going in, tax deferred, growth, right? I can take this money that I'm going to use for medical expenses either way and invest that money, have it grow at a certain rate of return. And then if I'm real smart, I can save all the receipts. Did I spell receipts right? Oh no. I can save all the receipts for later use when I get older, when I start getting gray hairs, when I have to go visit the doctora for an issue, right? From downtown. When I get older, you know, when I grow that man podge, whatever it is, right? I save all the receipts for later use, and I can reimburse myself. Did I spell reimburse right? Help me out. I can reimburse myself years down the road. I'm talking when I'm like 40, 50. Because there's no timeline as to when I can claim those receipts, right? So there's no timeline. It's not a use it or lose it plan, from what I've heard on multiple other channels. So there's no timeline when I can reimburse myself. And yeah, so when I reimburse myself, I can use that money tax-free. And then the difference of money that I had growing tax-free when I reach age 65 could be used for tax, can be used as an income stream from 65 and up. Now, the downside, I was talking with my mentor, the downside is it's not liquid. I don't have access to that money till I'm damn near 65, bro. I can only use it for medical. That sucks. But if you're a 10x mindset type of person, I don't think 3,500 ain't gonna hurt you too much. So you might as well have the account. So the downside is it's not liquid till you're 65 for tax-free, well, not tax-free, tax income stream. You do get all the benefits, you know, running a business, getting the tax deduction and whatnot. So I'm gonna play it out. You know, I'm gonna play it out. I'm gonna use the HSA to invest in real estate. I'm gonna self-direct it, because you can do that. That's pretty cool. Right, so I'm gonna self-direct it, and you know, use it to invest in real estate, invest in it, you know, maybe using like a brokerage account or something, and then go from there. Now, the next cool thing, and let me know if there's any questions on that. Let's see. Let me read. Let's hit the thumbs up button. Almost 50 people watching, only 10 thumbs up. Yes, please. I got a thumbs down from a hater without a player, because he a hater. Let's see. Edna, I have to move that 401k funds anyways, since I no longer work with that company. I could liquidate at a penalty to pay off debt or move without penalty into an IRA or fund a policy. Oh, you said that you have to liquidate anyway. So here's what we can do is, and I would reach out to the IBC team, because what you could do is roll over the 401k into a policy, the whole thing. And I would reach out to IBC Global to ask questions about that, and they will refer you to someone that does this. It's called IGIC, Investment Grade Insurance Contract. I believe that's the name of it. So that would be my recommendation, Edna. So you could disregard what I said earlier because you gave me more data, you gave me more information. And yeah, that could be a pretty cool option to consider. Let's see. Next question. Numbers have changed also because I purchased a house. That's how balance got to $4,700 for repairs. Okay, so you guys are communicating with each other. Cool, help each other. I like that. I like that. I like that. And for those of you who smashed the like button, I appreciate you. For the 49 people that are here, go ahead and like it. Like the video if you haven't liked it already. Okay? So now the third thing. The first thing was cash value collateral loans, in terms of new information that your finance geek, is learning. HSA is the second one. I like it. You know, I think it's cool. $3,500. It's a set and forget type of thing, and I'm not seeing it. Cool. I'm the type of person that if you put me in the environment to spend, I will spend. If I'm never in the environment, I will never spend. I'm one of those. So don't take me to the mall because I'm going to spend. I'm going to buy something because I don't like to leave empty-handed. But if you never take me to the mall, I won't personally go to the mall by myself. I won't personally go and blow money. I just don't do that. It's not in my gene code. It's not something I saw growing up, right? So therefore, I don't do it. But I don't know where I was going with that. But the third and final thing is a community, I think. I don't know. It's interesting. They're called FIRE. Anyone heard of it? FIRE stands for Financial Independence and Early Retirement. Get it? FIRE. Financial Independence and Early Retirement. I thought that was pretty cool. So that's what they stand for. It looks like a bunch of, high quality YouTube channels that I want to say like branched off from Dave Ramsey. I think, I was trying to track this. I'm like, dang, where are all these people coming from? Right? So this community is cool. It's a bunch of I want to say young people, like mid-young, like they're the last of the millennial. No, they're the first of the millennials, which makes them the oldest millennial group. So I think they're like 30, 35, the leaders, right? The leaders of FIRE. And there's all these different channels. You got couples, you got single people, you got a guy or a girl. And they're all talking different financial independence strategies. Their whole concept is they basically want to retire early. So you got all these millennials that want to retire by 40 or even sooner, like 30 years old, 35, or at least early by 40 or sooner, right? And I feel like they branched off Dave Ramsey because they don't talk anything about velocity banking or infinite banking or debt acceleration, mortgage acceleration. But what they do talk about is, you know, and I like these people because I think I can infiltrate this community. Them young studs, right? I think I can infiltrate them, and with my kingdom. I don't see anyone talking to them. I don't see any of them talking about God, you know, and Jesus. So I think I can infiltrate, you know, especially, you know, with this channel growing, you gain more authority. People see the luxury, right? So let me see. Yeah, they branched off from Dave Ramsey, but they believe in credit cards. So I was like, oh yeah, that's all I need. Believe in them credit cards. I'll get you over here. Trust me. So they believe in credit cards. They like low cost or no cost investing, whether that's using Robinhood. And they're giving you know, advice, and they're giving ideas on, you know, how to invest little dollars in your Robinhood thing and grow it, and ETFs and this and whatnot. So they're like a better version of Dave Ramsey, but you got millennials that are teaching it. And it's super cool. You know, I've been watching the channel. That's how I came across HSA. I was like, not bad. And then I heard about this FIRE community, financial independence and early retirement. And a lot of them are minimalist, frugal, and I don't blame them, right? Because you got this whole generation of millennials, me, right, that are growing up. We grew up in that recession, that 07, 08. Like we're growing up in a time where borrowing money is like the only way to move forward really, really fast. We have to borrow tens, thousands, maybe even over 100+ thousands of dollars just to go to school. We have to borrow all this money to get transportation, a car, a home. And so this group of millennials had it. So they're like living off the grid. They're living on like 30 and 40 and 20% of their income. And they're living out in Portugal and in these, you know, second world, third world countries. And they're making these YouTube channels, and they're talking about how cheap they live and whatnot, and how you can do the same and travel for free and all this stuff. And I think it's awesome because it's like they're learning how to consume within their means. And this is something that the baby boomer generation just missed. I don't know. I work with you guys 40, 50, 60, and you guys can't seem to spend less than what you make. And you wonder why your kids, millennials, are doing the same thing. So we're learning from you, right? We're learning from you. And the more you know, stay with that old thinking, the worse it's going to be off for us, right? So I think the FIRE community has this radical movement of like living on 40% of your income, saving the other 60% for like 5 years, investing it, having it grow at like 6, 7, 18, 20% returns or whatever. And then here's what they say. When you're passive, when the interests on your investments are equal or more to what your expenses are, then technically you have reached financial independence. And from that point on, you're cash flowing even more, where to the point where you could walk away from that job and do what you love. And so a lot of them, what they love to do is then teach what they did, and they make a YouTube channel and they share it with the world, and it's pretty cool. Now, I want to fire that thing up a little bit more and say, hey, velocity banking can speed up your little fire movement even more. Why not? Why not? You guys already like credit cards. You guys like using that no zero interest and cash back rewards. So why not leverage a line of credit? Why not leverage a life insurance policy and get better results? So don't worry. Over time, I'm gonna breach that community. Talk to them a little bit. So it's pretty cool. Pretty cool community. Raymond says yes. Oh, never mind. Happy holidays, everyone. John says, let's see. Yeah, Jesus says, fire, financial independence, and retire early. Oh, did I say it wrong? Did I say it wrong? Financial independence, retire early. That doesn't make sense. Financial independence and early retirement. That makes more sense. I don't know. Crypto says, so what can you roll over into infinite banking, 403B? I don't know, but I'm going to assume that you could essentially roll over any qualified retirement account. Is that true? I don't know. But I would assume that you could roll over any qualified retirement account into a IBC policy and have it designed properly for maximum cash value growth, and then you borrow against it tax free to now pay off debt, and then you're just now you just created your own line of credit. And I think it's good for people who do not like their 401ks anymore. They're like done with 401k. They're done with throwing their money in the market, and they want to have it grow guaranteed for forever. So I think it works good for that. Mary Mitchell, thank you, Denzel, publicly for your help. $24,000 paid in 9 months. Now on to parent student loan. You were my answer to prayer. Love it. Jesus says, Denzel, why not instead of HSA throw that 3.5K at a self-directed IRA or 401K? I don't know. I don't have a argument against it. I just came across HSA. I was like, that doesn't sound so bad. Let me take some money from my cash value policy, throw in the HSA for a couple of years and have that thing sit and grow. And I can get the deduction. Can I get a deduction from a self-directed Roth IRA or from a self-directed 401k? Can I get a deduction on that? I don't know. I'm not that educated on that yet. But it would I don't know. I don't know if I would keep funding it for a long period of time, only because of the downside is I can't use that money till I'm 65, like really, really use it. So I'm not going to throw too much money in it. So that's another reason why I personally don't have a 401k. I do, however, have a Roth IRA from Primerica that I stopped funding. There's like maybe 1,000 plus in there, and I just never touched it. 0.5% in fees. So I was like, I'm not gonna bother with that. So did you guys get a lot of value from this or what? Like the same 45, 50 plus people have been watching since this started. So I'm assuming you're getting some really good value out of this. Yes or yes? Let me know. Albert says it won't let me smash the like button. Try again. Let's see. Sharonda says, I'm totally over the 401k. I'm done. Let's see. Dave, man, that's deep what you just read about you helping someone pay off 24K in 9 months. You've been a blessing to so many of us. Thank you. It feels good, man. I mean, listen, I don't know how long this concept is going to work, all right? You know, the guy earlier that was asking about, you know, what if there's a market crash or something like that? Listen, I don't know, man. All I know is that if it's available now, you better take advantage of it. Start doing it now. You know what I mean? Like, really focus, people. You know, doing one thing the same way, not getting the results is what? The definition of insanity, right? So I really hope that was valuable to you guys. And I think that is it for all the questions. If I'll give you 30 seconds. If there's no more questions, we'll end it right here. Wish you a wonderful day. God bless. And talk to you soon. If you're new to the channel, again, you're going to want to go back. You're going to want to watch these fundamental videos. If you're considering coaching, one-on-one, working with me, all the links are in the description below. If you need credit repair, if you're looking to get your IBC policy, if you're looking to get access to business credit lines and whatnot, all that information is in the description below. And you can check out all the links and you can see what works for you within your budget. You take action, we start getting results. I'm going to be here doing this same thing day in and day out when it comes to velocity banking, infinite banking, and kingdom authority. And I gotta let you know one more thing. One more thing. This was a personal, small achievement that can lead to something big, I believe. So I'm going to pray over this, and I'm going to ask for all my moms out there that do watch me, and you're with the Lord, and you believe in Him, that, you know, I've been working, I've been spending some time creating a habit of going to church, right? And so I've been going to this church now for a couple of months. They're called Genesis Christian Church out here in Coral Springs, Florida. And, you know, I got baptized, submerged in water. So that was the one form of baptism. I got baptized in the Spirit. So I'm born again spiritually, and then baptized. And then I went through a discipleship course and just started, you know, giving time, and I started giving to the church again, which is something that I had to get over. Like, I had a thing against giving churches for some reason. For some reason, I just was like, man, I know how to use that money better than they can. That was like my mindset as a young know-it-all, young adult, millennial, right? But once I released that thinking that I know more than they know because they're not doing velocity banking, infinite banking, they're not, you know, doing these financial moves and whatnot. When I decided to release that thinking and give without a thought, without an expectation of a return, to give without even wondering where that money's gonna go, is when blessings and opportunities really started to explode for me on a whole new level. So for those that are trying to master and understand their finances, listen, if you're not giving, I've said this before in other videos, you're cutting off major blessings and opportunities in your life financially. Like, just talking financially, you're cutting off a law, right? It's a law to give. And so when you deny that law, and when you don't give it because you're either greedy, selfish, self-prized, self-righteous, whatever it is, man, it doesn't matter what you give, right? I mean, you got to just give it from the heart. Doesn't matter the amount, right? Jesus lifted that, right? And He said, give from the heart, give with thought, give with meaning, right? And I shall bless you 10 times, tenfold, or exceedingly and abundantly, and my God, I forget the scriptures. I'm still learning myself. But this church has an organization called LIEN, and it's the whole purpose is for like millennials. It's to attract young people to go back to church, because you're seeing this huge decline in young people attending church, because church is just becoming irrelevant. They're not getting the value. They're not seeing the value from it. So I thought it would be cool if I dedicated my life to not only build this channel and give value and share with people the concept of giving and receiving and showing them how proof, right? Proof, ladies and gentlemen, proof that this works, right? That this God is real, right? Okay, so proof. And inspiring young people to come back to church, to learn how to give again. And so Genesis has this thing called LIEN, and they made me the marketing content creator for them. So what I'm gonna do, and this won't get posted on my channel because I wanna make this as for God as possible and not for me. Like, I really wanna be very critique on how I do this, because I know that I have to check myself sometimes where I try to lift myself more than I should, so to speak. Like, you know, you try to boost yourself up more than what it is, or whatever the case. So I want to make sure that I'm not letting my left hand know what my right hand is doing, in a sense. And so they're going to start up a YouTube channel, and then I'm going to create content for them using the technology that I have here to like add a little flavor, I guess, to bring some volume, some energy, to attract young people to come back to church, and so that they can learn these fundamental grounding principles. Because here's the thing, in life, from what I have experienced so far, in life, there are things that it is what it is, okay? And you can't change what is, because it is what it is, okay? You just can't change it. Like gravity, right? You ain't changing gravity, buddy. Air, you need oxygen. It ain't gonna change. It is what it is, right? Giving, hey, it is what it is. You can't change that. If you don't give, you remove the blessing. If you give, you access the blessing, period. There are things, though, that you can change, that you think it is what it is, like your finances. Can't tell you how many people I talk to that, you know, I try to, you know, give my time. I'll jump on a free call, and just the energy is low, the enthusiasm isn't there. I'm like, what do you want it? I want it more than you want it, in terms of your own personal finances to improve. So there are things that you can change, like your behavior, right? Your attitude, or in general, just your way of being, right? You got to have a do have attitude. You got to be a king. You got to do what kings do so that you can have what kings have. Does that make sense? So if you want to build a successful kingdom for your family, okay, you're going to have to become a king or a queen. Behave like a king or a queen. Do what kings and queens do so that you may have what kings and queens have, which is a successful kingdom. And then at that point, guess what? It is what it is, okay? I'm a king. It is what it is. You can't take it away from me. I am a king. I am a sub-king to the King of Kings. It is what it is, right? And for those things that are not, is what it is, you can change it. Like your finances, like your way of being, your thoughts behind 10x, right? You can 10x your life, you can 10x your income, but you just gotta be someone that you've never been before. You have to become this authority, this way, so that you may access the tools that God wants to release to you. So that's the last thing I just wanted to share with you is, marketing content creator, where I'm just going to create videos, kind of like this little section right here. Did you like that? Do you think a millennial would be like, not bad, I think I can be a king? Or a young woman says, I want to be a queen. Yeah, like it. And bring them back to some grounding, right? Like grounding, like what are the things that it is what it is? This way we don't question it. Like, hey, it is what it is, man. Gravity will always be gravity, and air will always be air. I always need air for my lungs, right? And I'm always going to need to give, and I'm always going to need to manage my finances properly. And I need to have a 10x mindset if I want to live an abundant life. Like, these are just, it is what it is, all right? Hope you like that. Let's see. Crypto Winning says, I don't think he meant that. You don't need that much cash flow. Just call IBC. They're awesome. Very true. I'm creating my own criteria, right, of IBC because I don't really want to build small policies, right? I want to build bigger policies. And if I can position you to build a bigger policy, then it might be more effectively in terms of our debt-free timeline. Like it might not make sense to just jump into IBC. If I could do velocity banking in the first year, that would go faster than IBC. Because a lot of the time, IBC does not go faster than velocity banking. And then there's a lot of the time where IBC does go faster than velocity banking. So I do the math with both and I'm like, I think we should increase our cash flow by like $1,000 over the next 12 months. And then we'll get access to a higher credit line and then start the policy. So if I can just be patient like 12 months, 6 months, that might be the better flow. Does that make sense? So that's how I like to do things. Jesus says, Denzel, this by far has been your best live stream. Thank you very much. Well, the lighting does add to the flow, I guess. And I'm just really feeling it today. I'm getting a lot of energy. Getting a lot of energy right now. Let's see. All right, I think that's everything, guys. Love you. Have a wonderful day. And God bless.